So basically, for the first half, that we will talk about the NFT market analysis. How should we think about the non-fungible tokens? Okay, non-fungible tokens are basically on blockchain with a represents some unique like images, musics, like basically any type of digital arts that is unique, okay, can be represented by a non-fungible token. And we obtain the data from Ethereum that our research team will introduce that part, how we parse out the NFT data from Ethereum and provide the data service and API. And we also got data from Hedera. And so in the empirical part, we will compare like basically the trading on Ethereum and Hedera, okay? And okay, so here's our agenda. So for the first half, I will spend probably 5 minutes to 6 minutes talk about a general theory of NFT liquidity and pricing. Basically why, how should we think about, so, okay, if we look at the stock price, okay, which is very straightforward stock liquidity that every minute, every second, we will get a price, okay? But how should we think about the trading of non-fungible token or the trading of like art pieces, okay? So that's part of the theoretical research that my team has been working on. Like we propose a general model of digital arts and bridge the NFT liquidity to prices and the investment return, okay? So this is like the first half. We will talk about this is a pure academic research, okay? And how to think about the relationship between the liquidity and the prices. And the second half is that we compare the NFT liquidity and trading data on Ethereum and Hedera. Okay, so consists of 4 parts. Like we talk about the Hedera NFT data overview, and then we move to compare like the trading activities and NFT ownership on both blockchain. And we will discuss about the royalty fees for the Hedera, and then I will pass from the rest of the part, I will pass to my research team to talk about like the potential business application here, okay? So I will only do the academic part, and our team will do the engineering part and the business applications that we are exploring. And we will also like talk about like our research, application, how we apply like the AI, combine the AI with like the non-fungible token, and then we would talk about like the data vendor product that we are working on, and we also work on the education material of the non-fungible tokens to understand the economics behind it and basically the competition landscape. Okay, so we need shifted to that. Okay, so this is, I promise, this is the last part. This is the most theoretical part. Okay, so what's the main idea? Sorry, 1 page ahead. Okay, 往前翻页，往前 ，yeah. Okay. Anyway, okay, it's fine. Yeah. So. We have been thinking about like why people trade NFT. Okay, so very different from like say for example stocks or bonds. That is a promise of the future cash flow. Okay, in this scenario, that if you look at digital arts or if we think about painting, like whatever luxury bag, luxury watches, they do not give you any cash flow. They do not pay dividend at all, okay? So if you think about like the masterpiece of like Picasso, right? So it's never actually give you any cash flow. So you cannot really price that as a traditional financial assets. That's actually how I got interested in this digital art market or the non-fungible token market. Okay, so basically we try to propose like a pricing framework to think about the NFT transaction price and its liquidity. Okay, so basically, if you think about this art, very different from stock. Okay, so you do not see that Picasso's art piece gonna circulate in the marketplace every day. You do not see the daily price quote. Okay, so the collector will buy it and hold it for quite a while and put back to the auction. Okay, and try to find the buyer who is willing to pay the highest price for that. Okay, so we have to, so to rationalize this behavior, we have to think about, okay, so people can obtain utility from holding these art pieces. Okay, if I buy a luxury bag or I buy a luxury watch, I want other people to see it. Okay, that's why you see like Hermes and Louis Vuitton do a lot of advertisement, right? So they want to provide a utility to the buyers who actually hold these digital arts. Okay, so that's kind of the intuition that behind, and we just kind of write down a very standard utility discount function, and where people can derive utility from holding these art pieces or own an NFT, and we just simply assume that the utility will decreasing. Okay, that's basically trying to rationalize that why people trade, why I want to sell, because I get bored. Okay, if I hold some luxury watch or luxury handbag and I got very bored and then I want to sell them. Okay, okay, next page. Yeah, so that's like the agent trade off at any time. I can choose to continue to hold the NFT or hold the art piece to further obtain more utility, or they can sell to the bidders for financial return. When they see the market is very hot, okay, the art market is very hot, I can sell them, okay, and then the bidders arrive one by one with a Poisson intensity, and the bidders' decision, they can make a ticket or leave it offer by the owner. So basically, if a buyer come to me and say, okay, I make an offer, this is the price I'm willing to sell, and you agree or you choose not to agree and leave. Okay, so this is a very standard auction market assumption. And once accepted the offer, the bidder becomes the new owner. Okay, so this is the economy we think about the digital art. Okay, next page. 下一页. Okay, and then we just basically try to solve the model. Okay, 继续往下翻，一直翻到底。Okay, okay, good. So the idea behind this, I do not want to do math, okay, but the idea is, so the tricky part is that whether you at any time, whether you can meet with any buyer here, okay? If you meet with a buyer, you got a chance to sell your art piece, okay? So it's not like the stock market, there are always buyer. In the art market, it is not always the case, right? So if I don't like the NFT, I don't want to buy this design, then no buyer, then its value is at zero, okay? But so we say there's a lottery premium that's basically say, if there is a buyer, then actually the seller wins a lottery that they have a chance to sell their art piece to a new owner. OK, 下一页，一直翻到底，对。OK, so basically we can solve the entire model, okay, which is a little bit technical, but not that much. But you basically get two parts. One part is you can derive some utility from the bidder as they're probably willing to buy, and then you can obtain the flow utility. Okay, the flow utility means that if there is no buyer, you can continue to hold whatever the luxury watch and gain utility. Okay, okay. Yeah. So okay, okay. Next page. So these are the technical part, and 下一页，对。And so why we are very interested in understanding the liquidity or this like why this is matters for the price. Okay, so we just kind of so our first lemma or first proposition is basically to show that the utility gradually decay over time, that as the expected future utility becomes lower and lower, that I get, so in short, that I get bored and I start to get lower and lower utility from holding the NFT till forever. Okay. Yeah. And then the first proposition that is actually our main proposition, okay? So the owner elects the lower limits of the target buyer's type as a holding the period increase. So the idea is, so for the seller, for the owner, my optimal strategy is to gradually quote lower and lower prices, okay? So what's the intuition behind this? So because I can derive less and less utility in the future, and I know there are new incomer who are interested in my NFT, but I can get less and less utility from the future. Then when I make an offer to the new buyer, as time goes by, then I would prefer to lower my price offer so that my NFT can be sold to a new buyer, to a new owner, okay? So the intuition is very straightforward here, is that our model's prediction is if you see that the market is very hot, okay, that my holding period is very short, then that means there are a lot of interest in buy this NFT and I can quote higher prices. But if you look at the transaction data, if the holding period goes longer and longer, that's in short in finance term, if the NFT gets more and more illiquid, okay, then the expected sell price would be lower, okay? So in Chinese, let me rephrase this. So最直观的一个经济学直觉在这个地方就是，如果我持有一个艺术品，然后我没有能够在短时间内卖出去，但是你看到它在市场上挂了很久的时候，那你就预测它很难卖到一个高价。对吧？就是你如果可以在市场上完全看到所有的艺术品的完整的交易记录的话，你如果作为一个买家，你看到啊，它挂了一个很高的价格，其实房地产也一样，对吧？你挂了一个很高的价格，但它很久没卖到，那你就可以推断到之前来的那些买家并不认可这个价格。其实你去想房子也是一样的事情，就是他不愿意买，那么他挂的时间越长，他就必须要降价。如果他的降价不到位的话，他是没有办法把这个一个非标化的，我们可以说艺术品或者非标化的产品卖掉。对，这个就是我们最直观的一个直觉。下一页，对 ，OK，对，再往后翻，对。Okay, so we look at the data. This is highly contributed by my research team that we do the plot and we plot the relationship between the US dollar return. This is with the Ethereum data and correlate the return with the holding period. So you can see like the realization of the NFT investment return is significantly negative correlate with the holding period. Okay, 下一页. Yeah, so if we further extend, so that's from day 1 to day 7. If we further extend to day 30, you can see this pattern. The average daily return goes down to 3%, all the way down to pretty much close to 0. If the NFT cannot, if the NFT on Ethereum cannot be resold in the first 30 days, then basically the return is fairly close to 0. Okay, so to buy a NFT. 下一页. Okay, so you can see that after the 40 days, okay, so buying NFT on Ethereum, actually it goes to the negative range. Then you are expected to lose money, okay? If you're considered to buy non-fungible token on Ethereum, and you should be aware that if you can successfully sell your NFT in the 40 days, then on average you can achieve a positive return. But if you cannot, then if you truly want to get any financial return, it tends to be very negative. Okay, so this is we just do a very simple plot from day 0 to day 90. Okay, so conclusion. Just quickly conclude our research. We highlight like the NFT liquidity is very important. Okay, very important. If you want to run an NFT project or any digital art project, you need the sufficient high turnover to make sure that the buyers can actually achieve investment return. Otherwise, either you will be the last one to hold it, okay? 就是你就在里面接盘了 right? In Chinese, 你就接盘是最后一棒，或者或者你就得亏钱才可能卖掉。Okay, so academically, there is a strong selection bias in the data that basically, if you can find buyer, there are a lot of NFT holders that they cannot find the next potential buyer to sell the digital arts or sell the NFT token to just get any financial return. Okay, so there is a huge selection bias. And if you look at the current research literature, There is one paper by Bori, Liu, and Tavensky. They estimate the NFT return, and they just, if you compare like NFT return with the stock market, on average, US stock market delivers 0.3%, cryptocurrency market deliver 1.1%, and they argue that the NFT market give you 2.5%, okay? So our research basically show that this return is hugely overestimate, okay? Because if you just look at the transaction data, you're very likely to overestimate because only the popular NFTs got sold to new buyers, okay? So that's kind of the research idea.